So, big tech. Is it going to save Bitcoin or what do we know? So, TSMC, Taiwan Semiconductor Manufacturing Company, have come out with some storming results, which is effectively reviving what you're witnessing in the stock market. This is the problem with tech market. When there's no news about tech, investors are like, oh, is everything overvalued? Or, what are we going to do? I mean, Nvidia has corrected 14%. Google's just a little bit off its all-time highs. Microsoft has corrected aggressively. In other words, big tech has been pulling away from the market, and the volume dominance isn't present. However, TSMC have declared some outstanding results. We're going to break down those results because it's going to give the tech investors a little bit of a push to be like, you know what? Yeah, maybe we've got a good chance, because the market doesn't care that we've got high interest rates. It doesn't. It doesn't care about wars. It really doesn't. It's just we're missing out on an opportunity. And this is why they come out with the idea of bubbles. They think that, oh, okay, then if we're going to miss out on an opportunity where a company is doing really well, that means earnings per share. They don't care. The data this morning that came out regarding the unemployment claims, it came in lower. It came in a little bit low. What was the actual? 198,000. So that right there is proof that we don't need to worry about interest rates anymore. And you might think I'm being wild with this actual comment, but look at what's going on. NASDAQ. Did we not say yesterday that the drop yesterday was more than likely being engineered for the TSMC results? It's like they knew, innit? It's like they knew that NASDAQ taking the nosedive yesterday was only engineering it to come back up on the back of the fact that TSMC has done absolutely brilliant. Not to forget that these guys are doing big things. They're building their plants in Japan. They're also doing it in the United States, okay? They do have big lookout on development for semiconductors. They are the key player right now. But what you've got to take into consideration is they have stated that their capital expenditure is going to be quite a bit, but investors do not care. They look at it as, this is great news. You're expanding, more people working, more interest, more semiconductors, more demand, higher earnings per share. Now, we've had some good news regarding the banks this morning. Morgan Stanley has done really well. BlackRock's also thinks also done all right, but Goldman Sachs doing great. So we don't need to worry about JP Morgan. Like, forget about that. So it looks like everything is all systems go. Like, interest rates, what the hell are you talking about? Do we need to even care about interest rates? Wait. Look at that. Do we need to care about it? No, we don't. That right there has gone up by nearly 6% in terms of the bets because they expect that the rates are going to be higher for longer. Don't worry, ladies and gentlemen. High interest rates means nothing. It really does, because that is being shown in the way the market is behaving. This disconnect that you're getting is showing you that this is all of the makeup of a bubble, because investors do not care. They're not interested in anything other than the fear of missing out on something. And this is showing you proof. NASDAQ right now is trading at a value area high. So those guys who do volume profile will know that it's trading at the highest value possible of the day. The S&P is currently stalling at its all-time, not the all-time high, but it's at its high of day, and so is the NASDAQ. And they just keep on gunning for it. It's like they're not stopping. Going over into the Bitcoin, I mean, Bitcoin's doing perfectly fine. It's doing great. It's coming away from its Asian session, and it's not taken a high, nor has it taken a low, but it's just stalling sideways, and you're probably getting a bit frustrated with the way Bitcoin is behaving. But overall, it looks like the market just does not care. But we've had some interesting news. Yeah, the Bank of Japan, they're getting a little bit concerned about things. A minister yesterday did come out and say, yeah, we've seen that the yen itself has taken a bit of a nosedive going over into the yen itself. You can see that we've got it trading at very significant levels, absolute wild levels, and taking that correlation over into dollar yen. Dollar yen is behaving very, very interestingly. I mean, it's going back up towards the 159 region. If it starts tapping the 160, then we've got a major problem for the Japanese. And then on the 23rd of January, we have ourselves, of course, the press conference with the Bank of Japan, which are going to tell us what? They're not going to do anything. They're going to tell us they're going to increase their interest rates yet again. But again, forex intervention where they will load up on dollars, because I said this morning, what Bank of Japan, I believe, are actually waiting for is to see that there's an appreciation in the dollar. If the dollar itself appreciates aggressively, then it's worth their time buying up as much dollars as possible to convert them over to yen, to give them the chance to obtain a lot of yen for a chip, in the sense of using less dollars to get more yen, which means that would inflate their currency massively and bring it back to the levels that they need it to be at. So in my opinion, I believe that they're waiting for the dollar to get to at least an appreciation of 100 plus, and then we're going to get the carry unwind, because at that point, they would have then used all those dollars to buy up all the yen, and then the dollar drops, the yen shoots up, the euro shoots up, and then you get your carry unwind. You see, when you come to the marketplace with the retail mindset, like someone just asked the question about the positions of gold and silver. What's going on with all the guys that are short on gold and short on silver in terms of the commercial traders? Well, you got to understand, they have options plays where they're relying on a longer period of time. In the meantime, when the option is going against them and they're effectively seeing price going up, they're going to go entry on spot, okay? But commercial traders and swap dealers are heavily short on silver and gold, which is obviously giving us the idea that there's going to be a reset. This movement to the upside, of course, it is being fueled by geopolitical tensions. And what these big players are going to do is they're going to keep running the spot as long as the geopolitical story keeps on playing out. And then once it all calms down, everything will then start to correct. Gold and silver will come back, and then everything will pull back. They'll go into safety of the dollar, and then, of course, reset and go back into stocks. All right? So that's something you've got to really just be mindful of and watch out with. Don't confuse the fact that just because commercial players are short on silver and gold and retail is going in buying and buying and buying, you want to pay attention to the players that are doing the opposite thing. But you've got to give it the freedom. You've got to say time. You've got to say to yourself, hold on a sec, man. Why are they positioning themselves for shorts? If you understand how they operate in terms of hedging, then you'll understand that gold's move is going to be easily welcomed with a move back down again. And if the move back down doesn't mean it's going to lose 100% of its range, but what it's going to do is it's going to correct quite aggressively at speed, which is where those short players get themselves fulfilled, and then everything returns back up again, okay? There are price projections for gold and silver, to gold to hit $5,000 and then silver to come around to about $150. But you can see now silver's starting to pull back a little bit. Gold is starting to pull back. If gold's pulling back off the back of the strength of the dollar, it could be consolidation. It could be investors taking profits. It could be geopolitical tensions calming down across the board. But you got to understand on what the story is, in the sense where when you confuse the idea of commercial players and retail traders, just because everything's going up, remember, retail is fueling this because it's fear. People feel like they're missing out on opportunities across the board. Okay. Now, with that being said, ladies and gentlemen, let's just sort this out. With that being said, going over into what's been going on overall in terms of cryptocurrency, because everyone's asking the question, is Bitcoin going to clear the 100K mark? Well, Bitcoin is trending very, very well towards the 100K region. And going into the order flow of Bitcoin, we have been in a successive offering, which means that they've been selling the Bitcoin quite a bit. And you can see these red bars right here. These represent the idea that they are selling Bitcoin as it's moving up. Okay, that's good news for us. Going into the order flow, you can see that we've had a nice little interest in Bitcoin at 97, but we still got this high all the way up here at 97,900. We really need to clear that range, and we haven't taken neither the Asian session high or the Asian session low. What we do need to be careful of, guys, is the fact that the NASDAQ and the S&P are trading positive, and then you've got the Dow Jones just trading just subpar minus 0.01%. And then on top of that, when we add it all, we do have the volatility index trading lower, which is good news, because yesterday when NASDAQ was marking higher a little bit, the VIX was trading positive. And it wasn't really a good sight. But whenever you see the VIX trading positive and the NASDAQ trading positive, just go with the volatility index. Always go with that. Don't watch what NASDAQ does. And the reason being is because NASDAQ is a nut job. It can go up and down, all right? But when the VIX itself is trading positive, it's telling you that players are positioning themselves to protect themselves. That means they are hedging. So when you see this being positive, focus on that. And if the NASDAQ is going up, Just be very cautious because it could be a trap. And that's what it was yesterday. They marked up ever so slightly after that drop in the morning. You'd anticipated a bit of a retrace, but then they didn't sustain that. But the VIX was trading positive, telling us that the sentiment was investors wanted to hedge themselves, which is what led to this big, bold move to the upside on the NASDAQ. Okay. Now, moving forward on that, ladies and gentlemen, the open is coming in the next 15, 20 minutes or so, going over into other assets across the board. So let's just break it down. NVIDIA coming in at the open itself is up nearly 1.58%. That's really good for NVIDIA, but the volume really isn't present. It was down quite a bit yesterday, so it's only effectively gave back those those losses from yesterday. Going into the NASDAQ itself, something that we do need to pay attention to. The NASDAQ traded negatively on high volume yesterday, even though price action was finishing a little bit flat. This is no good for us, all right? We really need to see positive volume coming in. And if this move to the upside on the NASDAQ is not sustained with volume because it's up nearly 1%. Wait, where is it? Yeah, 1.07%. We've got ourselves a little bit of a problem. What is this? Yeah, we've got ourselves a little bit of a problem if NASDAQ doesn't sustain this because it's going to just mark down. It will drop down aggressively if the volume isn't present. And that's something you've got to take into consideration. We've completely wiped out the range to the upside and the New York session isn't even open. So if there's still more room for the NASDAQ to actually go higher, ladies and gentlemen, what is this market? It is cooked. It's not making sense at all, which makes me think that this could just be a stop run. But when you break it down, it's just the bids and the offers. They were bidding yesterday, and now they've sold it. Now we're back into the same area. Are we in the idea that it could be rolling over? Will the disconnect, because I did say to you guys, go onto X and find out all the people that are talking about Bitcoin is decoupling from the stock market. Well, we want to wait and see if that's going to be the case, okay? We want to see if that is going to be the case, because the one thing that we do need to take into consideration is this. If Bitcoin has been going up against the stock market, is it because they've been accumulating quite a bit of Bitcoin here and now they're offering it out? They want to get rid of it. So they're in concerned about things. Why has the BlackRock ETF been so aggressive with its sales and offloading the Bitcoin? And they're only going to do it when prices are appreciating. People will only sell the Bitcoin when it's going up, not when it's going down. Retail will sell it when it's going down. But the players that have been buying it at these lows are going to want to sell it when it's rising. Remember, they do not care about our perception of what Bitcoin's price should be. Okay, if I buy Bitcoin down here for 100 million at 87,000 and I sell it at 97,000, I've earned myself a 10 grand move in Bitcoin. I'm going to get out and wait for the next play. Does it matter what the price is? No. What matters is my ROI, my rate of return. Like, how am I going to make myself money if I'm not paying myself? You know, whatever consolidation period it is. So look at this area here. It's made a move up. Go to this area here. The same logic holds true. They bid for it, and then they offer it out, and then they get ready for the next play. Again, they bid for Bitcoin, and then they offer it out, and then they bring it back down again. Okay, so you got to understand that a lot of investors are, in my opinion, are short-term with their expectation of Bitcoin. And if they weren't short-term, then they'd be holding on to it, and we would be getting these wonderful moves to the upside, and they would be sustained as well. Surely you should be asking the question, if there is a supply on Bitcoin, why on earth is Bitcoin still at the price that it's at? Surely it should be like $200,000-$300,000 a Bitcoin. Why isn't it at $1 million yet? If there is a supply, the world has access to buying Bitcoin. 760,000 of your Bitcoin is inside of the BlackRock ETF. All right? Not to forget about the ARK as well and Fidelity, all those guys. All this supply of Bitcoin is being soaked up, right? So why isn't it moving? When does the concept of supply and demand come into play with Bitcoin? You could say it's being suppressed. You could say that futures volatility or futures volumes, okay, is effectively not giving us the true representation of Bitcoin's behavior. And then when you see this stuff right here, you know for a fact that they're selling the Bitcoin. They are selling it. They're selling it into retail. Who's buying it at the wrong time as it's moving up? These are spot sell orders. Surely that should make you think about something. Someone is selling Bitcoin on spot as it's moving up. Doesn't that worry you at all? That's something to put into perspective, you know? Interesting. Yeah. Tina, what do you think would be the benefit from lowering my size and trading the 15-minute instead of the 5-minute NQ mainly? Listen, I'm going to say it once and I will say it again to you. It's not your system, all right? It's not even the psychology, all right? There is nothing in trading that you can find that will say, yes, this is the way to do things. There is nothing at all. You're dealing with the realm of uncertainty. You don't know what the market can do next. Experience might make you believe that, yes, it's going to go up to this point, it's going to come away. And then when people start saying the old, I just trade support and resistance, I don't need no indicators, it works for them because they've evolved themselves around it. But does support and resistance always work at the time that you expect support and resistance to work? No. So how do you get round getting to the point where you can allow your expectation of price to get to where you need it to be? Size. The lighter you trade, the more you can trade, the more you can learn about how you trade, the better chance you give the asset to move in the direction. Your system doesn't factor in stop runs. It doesn't factor in the concentration of the stop run. It doesn't factor in the length or the duration of the stop run itself. But your size is going to dictate how long you can absorb it for. Focus on being able to absorb the move against your position. And when you can control the absorption of your capital against the move, then you can say, you know what, I'm going to wait and see if it can work in this directive. Otherwise, I'm going to move away from this or close off the trade and start again. But at least it hasn't ruined my account. All right. And that's what you've got to really do. There is no system out there that says, yes, you should buy and you should sell and it's going to work indefinite. When you start thinking about the idea of, I need 100% win rate on a system, you're a joke. It doesn't exist. 90% doesn't exist. 80% doesn't exist. But the 80 and 90% is a representation of that person's ability to execute a set of rules and make sure that they keep their risk in line with things. Can you execute the right size 80 to 90% of the time? Can you do that? Or do you get excited when you see price working in your favor and you want to add because you're getting excited about the move and the prospect of making money? Again, systems don't do shit unless you're a quant and you've got all of the information that you need and you've got tons and tons of data to back test it and, of course, develop a sample size of probability outcomes. Then statistically, you could say that you are that trader, but your win rate is all based on your success of being able to execute the right risk, the right size. And at least in the environment of the unknown, you can absorb when it goes against you in one way or the other. Okay? So just take that in your mind, ladies and gentlemen. Think about that and focus on a system because you need to have a way of trading. But ultimately, if you're using too much size, you're not going to stand a chance. Look at these wicks. Someone might have gone long on this green vector candle. They may have been shaken up because they used too much leverage. And then it's just worked in their favor. If they use the light side, that's why I say when you're going to take a trade, ladies and gentlemen, probe your bets. Start light. Open a small trade. Say you go long from here. Open a small trade. If it works in your favor, it's going to keep going. And then when it keeps on working up, if the intention is to keep on going up, it will keep going up. And then what you will do is you will add to the retraces. These are the retraces we talk about, ladies and gentlemen. There's your rise. There's your retrace. There's your continuation. There's your rise, your retrace. We assume the continuation. And the market ain't even open just yet. All right? So put that in the back of your mind, ladies and gentlemen, when you are trading, okay? With that being said, guys, of course, it's Thursday. We usually understand Thursday to be a bit of a midweek reversal point for cryptocurrency, but the overall sentiment across the board is suggesting that TSMC, with its earnings announcements, has got a lot of people excited about AI. So naturally, we can see that the tech market is actually performing very well. NASDAQ is up. The Dow Jones is down. Makes sense of that. But anyways, with that being said, I hope this makes sense to you with regards to risk and sample size. I'll be tuning into you all later on. Get yourselves ready for the market open. Platinum members, I'm going to be speaking to you all very, very shortly. With that being said, guys,